everyone. Thank you for joining me today. And I just wanted to share some information in regards to the commercial real estate market. And we know that the office space and the retail space has been on a downward spiral. And that is rooted in the fact that because of the rapid increase in the interest rates from the last year or so, and the fact that these loans for commercial real estate are due for renewal, that the current landlords or owners of these buildings, they cannot longer refinance because the rates are so high, anywhere between 7 to 9%, added to the fact that a lot of them hold very little equity on these properties. And having the vacancies that they've been having, they don't have, even if they had the money, even if they were able to refinance or afford the payment somehow, they couldn't, because they will have to provide proof of rental income. And if they don't have that, most lenders are not going to be lending let them borrow any money. So in this video, we're going to just take a look at what some of the market experts are talking about and what the future holds for the commercial real estate market for 2024.
Please subscribe to my channel for more valuable tips and advice on the real estate trends and the economy.
Okay, so let me share this article by San Francisco Gate. They said, not at the bottom yet. San Francisco office space hits records high. And it says that the San Francisco office market continues to struggle, but it hasn't hit bottom yet. That office vacancy in the city rose to new heights in the fourth quarter of 2023, according to the new preliminary data from commercial real estate firm CBRE. And the vacancy rate increased to 35.9%, a modest jump from last quarter's rate of 34%. That translates to another 1.4 million square feet of occupancy losses, the equivalent of Salesforce Tower completely emptying out. A total of 6.7 million square feet of office space came on the market in 2023, making it the second worst year since 2020. Much of that increase was contributing to large sublease spaces being placed on the market, as well as leases expiring. Asking rents for office spaces still aren't coming down nearly as fast, though. In the past quarter, rates declined just 2.5% compared to the third quarter of the year. The market probably hasn't reached bottom yet, either, according to Colin Jaskowski, executive director of CBRE's Tech Insight Center. He expected vacancy rates to continue to rise at least through the first half of 2024, according to a statement. He said the office market should stabilize and begin recovery as economic conditions improve. That remains to be seen. And interest rates decline during the second half of 2024. Artificial intelligence companies are still the bright spot in the office market. The technology sector made up 28% of the total leasing activity in 2023. Meanwhile, the recent sales in the downtown commercial real estate market indicates things might be looking up. The 14-story tower at Samson Street recently sold for $35 million after a bidding war. Industry insiders told The Real Deal. While that's considerably less than its 2016 sale of $83 million, I don't see that as a condition of improvement when it sold for less than half of what it sold in 2016. It's still 40% higher than the $25 million it was marketed at. Okay, so they started really low, but they still got less than half of what they had bought it for. And just to get a quick refresher on what happened in 2023 as far as the commercial real estate goes, we had in San Francisco the news of Veritas default on debt for nearly $1 billion in apartment buildings in San Francisco, which kicked the new year off with a bang and led to a slew of stories following up on what will happen next of the city's largest landlord. Then we had the bank debacles, and during March of last year, a run of funds at two local lenders, Silicon Valley Bank and First Republic, had readers straining to see what the fallout would be like for the real estate sector. We saw that many of the industry thought that First Republic might be able to keep its doors open, with agents calling it one of the main arteries for the tech world and the rich. and an essential partner for the multifamily industry. However, by the end of April, it was seized by the federal government and its assets sold to JP Morgan Chase. Then Silicon Valley Bank was acquired by First Citizens Bank, and was recently reported to have been close to a deal on new office space in South Financial District. Then later in the spring, we saw that the attention turned to several downtown office sales that ended up setting the new floor for commercial space in the city with massive discounts. We also know that there is a crisis in the retail sector in cities like San Francisco because unfortunately, the owners are unable to keep their stores open due to all the criminal activity going on in the cities. So as far as the downtown discounts, attention was turned to several downtown office sales that ended up setting the new floor for commercial space in the city with massive discounts and mostly local buyers using private money to finance the deals. Peninsula Land Trust bought 550 California Street for $40 million. This was the Wells Fargo building. A mere $120 per square foot, 60% less than what Wells Fargo originally paid for in 2005. SKS and SWIG came together to buy 350 California from Mitsubishi Financial Group for $61 million, which was a 75% discount from what the Tokyo Bank had asked in 2020. Later this year, we also saw that Vista Investment defaulted on $24 million tied to San Jose offices. And the East West Bank was seeking judicial foreclosure of 100,000 square feet of property. They said that the loan was tied to almost 100,000 square feet office building in North San Jose, with the lender moving to seize the property. So as banks are consolidating, a lot of these regional banks hold most of the real estate debt, and when the owners are unable, the borrowers are unable to make the payments, that's going to be impacting further these banks. And so we're seeing now that all these banks are going to start to close, and there's going to be more chaos coming down the line. Investor Kevin O'Leary just said recently that there's going to be a banking collapse this year. He predicted that the coming real estate collapse will lead to chaos. And here's what you need to know, according to an article that was written. He said he believed that commercial real estate sector is on the brink of collapse and will bring with it ripple effects that will be detrimental to investors and small business owners. The shift away from in-person work will lead to more bank failures. He said many of these office spaces are in subgrade markets, but even in cities like Boston, you find lots of vacancies, up to 40% of buildings, O'Leary said. So it's not a problem exclusive to the San Francisco Bay Area. The challenge is in very other real estate cycles, when you have a correction, which is about to happen here because of rising rates, we've got to refinance these buildings. Many of them have no equity on them, which is the point I was trying to make earlier. Commercial real estate will need to be converted for other uses, but these can be challenging. What is unique that's just coming onto the radar screen is that most of these cannot be used again as office space because of the economy has changed. No one saw this coming, but up to 40% of people that work in small businesses don't return to offices anymore. So we have to repurpose these. And for that, of course, you need zoning changes and policy changes. Interest rates of less than 4%, he said. Now the Fed, they were less than 4%. Now the Fed has raised it to 5.5% terminal rate, which means that these mortgages are going to have to be refinanced at 9 to 11%, so 3 times the cost. So many of these buildings won't be economically viable. Unfortunately, always the little guy is left holding the bag. The issues with commercial real estate will hurt small businesses. And as regional banks feel the effects of the commercial real estate collapse, this will be carried over to small business owners who normally seek loans from these banks. And this is something really important that he said. Regional banks have closed to small businesses because they have capital call requirements put on them because of the pressure on this commercial real estate. So they are not making loans. So we have got to put the pressure on the regional banks, commercial real estate collapse, and small businesses are not getting any capital. And of course, this is all bad news. Yes, it is bad news, the fact that these regional banks own about 70% of all the debt on real estate. So as they collapse, small businesses are unable to get loans. And once small businesses are unable to get loans, they cannot pay for the products and services that they provide and salary. So we will probably be, unfortunately, experiencing more job losses and more bank closures as 2024 plays out. So thank you for joining me today, and I hope you can subscribe and like my video and share it with your friends, and hope to have you next time. Thank you.